just don't see it. All right, there we go. All right, so let me just get this one last thing written up there for that platform. Okay, and we are live. Okay, welcome everybody. So we are recording there, recording there. Okay, all right, so we are live. Okay, got it. Okay, so we welcome to Money Matters. I am Hung Lu and I am with Cash Property Inc. Today is November 27, so we are starting a couple minutes late because I was cleaning up a spreadsheet, wanted to make sure that I present the clean stuff during the calls. So in the next 30 minutes or so, we will analyze a couple of deals. So today we are going to be focusing on the Regina, Saskatchewan area. And I've got a couple of real estate questions that came through, so I will answer those as well. Okay, so before we get going, I just want to do, I've got 3 shout outs here. Okay, so the first shout out is to my lovely son, Taishan. So the shout out to him is because over the weekend, he was telling me that he's taking some of the printed listings that we get when we go to open houses. He's taking them and going to school and wholesaling the deals to his schoolmates, which is so like it's an odd game. So over the weekend we actually got him another listing from one of the condo buildings, and he was actually telling me what was good and what was bad about this condo listing. So that was quite interesting to see. So a big shout out to you, my lovely son. All right, I also have another shout out to Raymond. Hi, Raymond. Thank you so much for being my general contractor in Toronto. I love having that freedom that you give me by being such a wonderful general contractor. Yeah, so I just want to say thank you to all your team and to you and for the wonderful work that you do for me for my Toronto properties. Okay, and one last shout out. This is to the Beekman family. So it's a family who I am having the pleasure and the honor of coaching. And I had the chance to work with them as a unit last week, and it was so much fun. So thank you for that. And I'm looking forward to working with you and just seeing the growth within your family. And, you know, that's one of the great things about what I do is I get to help families find that financial freedom. So thank you for letting me be a part of your journey. Thank you. Okay, so before we get into the analysis, I do have to put out a disclaimer that anything I say and show, any of the opinions I share on this 30 to 45 minutes, it's just my own ideas. Please go and check it with a lawyer, accountant, financial advisor, another real estate investor. Bounce the ideas off of them. Make sure that it is right for you. Okay, so that is the disclaimer there. Okay, so let's go into the deal analysis. Okay, so let me share my screen. Okay, so sharing screen. So I'm going to share with you, let's see here, the realtor.ca. This is the good spot to start. Okay, so on the screen, you will see, let me move this out of the way. Okay, this is the realtor.ca listing. And the reason why I'm going here is because usually this is the place to start. Okay, ideally you want an agent to be working with you and sending you listings, or you want other people that you've been networking with to send you deals to look at. But if you really don't know where to start, this is a good place to start. Okay, this is realtor.ca. So I went in and I basically just typed in Regina. I did one filter. Okay, and that filter is for multifamily with freehold. So usually multifamily is freehold. So, and then I left it unlimited. Okay, sometimes you need to go in here and adjust the price points, but I left it unlimited because I just sort of want to see what's available there. Okay, so as you can see, there's not that many listings, but there are 5. You only need one good property, right? So let's bring them up. So I actually have them, I have 4 of them open. I don't know why I didn't open all of them. Okay, so let's go and look at all 4 of them as a quick overview, and then we'll maybe pick 1 or 2 to analyze them. Okay, so let's do this one here. So this one, let me move this out of the way. So it's this building here and 900,000. It says vendor financing. So you could see that written up there. So I love vendor financing. Okay, so vendor financing is VTB or seller financing. It's where the seller will provide you some of the mortgage so that you don't have to go out and get the full amount from a bank. And two, you don't need as big of a down payment, but you still need some down payment. Okay. It's not like zero down payment here. You still need some down payment. Okay. And you also need some money for closing costs. So it's, yeah, some people promote that zero down, you know, no money in type of thing. You still need some money, whether it's your own money or from somebody else, you still need some money. Okay. So let's see here. So vendor financing available, 9 suites, TLC. Okay, so that means tender loving care required. So meaning that there's going to be some renovations needed. Location, property features 3x3 beds. Okay, so there's 3 bedrooms, 3 2-bedrooms, and 2 1-bedrooms, and 1 bachelor. Double detached garage, great potential. Okay, okay, so 1970. There's the taxes. It's been on the market 119 days. So it's been on the market quite a bit. River Heights, okay, multifamily, and yeah, nothing else there in the listing. Okay, so what I would do is bring up an analysis sheet and run it. So now when you look at the photos, okay, just to point out here, you can see it does need some love and care. Okay. So which is the TLC part. So you could see there's like boarded windows. There's like some of the siding's gone. The trimming is gone here. Okay. The paint job here, maybe some of this caulking around the foundation might need to be fixed. Okay. There looks like pooling of water on the roof. Their front door looks sealed up there. Okay, so you are going to need to put some renovation money into this. So you can see this part here. Yeah, it doesn't look nice. The doors probably will need to be automated. Okay, what else can you see in the photos? I think that's it. Those are all the photos there. Yeah. Okay, so it's this building here. So let's look at the other listings and then we'll pick one to analyze. So the next one is this building here. Okay, so, you know, some minor repairs on the stairs there. The outside looks quite nice. There's a little bit of bulging here, so that would be something to check. It looks like some cracks here. So that would be something else to check. So they've got window AC. So usually this isn't a problem if the tenants are paying the hydro. Okay, but if you as the landlord is paying the hydro, you don't want window ACs at all. Okay, so this is 1.365. Let's see what the listing says here. Okay, to steps from Kiwanis Park. Okay, there's a bus stop right outside for the university, so that's good. 12 suite units. Okay, so with little, okay, so you have to read the fine print here, little to no vacancy. And okay, so it's 11 1-bedrooms and 1 bachelor. There's no, oh, there is parking at the back and heat and water are included in the tenant's rents. Okay, so that means as the landlord, you're paying for water and paying for heat. Okay, which means you're also paying for the AC. Okay, they pay for their own power. Oh, okay, so no, that's not true. So then they're paying for their own AC. Okay, so updated the roof, windows, and boilers. Okay, so this has been on the market 219 days, so it is not moving. Built in 1955, 14,000 in taxes. Okay, there is a video and okay. Yeah, so it looks like the hydro the people pay for, but then the gas, the landlord pays for that. Okay, let's look at this one here. So this one is 800,000 and it says amazing downtown location, 11 units, 10 beds, 1 bath, 6 parking stalls, rented out separately. All units are spacious and well laid out. Okay, so if the units are truly spacious, one strategy would be to take the 10 one-bedrooms and change them to 2-bedroom units. Okay, so that would be one value add strategy. Ideal setup for mix of long-term and short-term rentals. Prices reflective of work required throughout. Okay, so you definitely want to take that into consideration, that there's going to be a lot of repairs needed. Okay, currently unoccupied. Okay, so that says it all right there. Where purchaser can apply for tax incentives or capital grants for the renovations. Okay, so there's some sort of program that's available. It's been on the market for 24 days. Okay, so this is a newer listing. Okay, but you are also getting into a lot of repairs here. Okay, so let's take a look at this because that actually does sound quite interesting. Oh, there's actually not that many photos. Okay, so that's the building there. It's quite, yeah, it's right downtown. Okay, so let's see this one here. Are those the actual parking lines? Well, those look new, or maybe they just drew those in. Yeah. so so you could see it does need work because there's barred windows at the bottom here, and it's the parking's not sorted out, so you have to go and get that painted, which isn't a lot of money in the whole scheme of things. So this is the roof. Yeah, I don't know what this metal line here is. So there's actually parking here, and then there's something at the front here. So probably some yard work would be nice, like some trees or scrubs or something to make it look a little bit nicer. There's one tree, but that's pretty much it, right? So yeah, like you can beautify this and put up a fence and then put like a garden for the tenants, right? You might be able, if the structure allows for it, like some rooftop stuff. Okay, so let's look at the next one here. So this is the Gray Street. Okay, so 1.19 in Regina. Okay, this is 12 suites. Okay, so the price points here for these buildings are a lot lower than what we would see in Toronto or Vancouver. Okay, so part of that due diligence now is figuring out, okay, well, what is the market really like? Like, what's the employment? What's the crime rate? What's the, what's drawing people to live there? Like, are you just going to get cash flow and mortgage pay down, or will you actually see some appreciation here? Okay, so those would be the initial things as part of my market analysis that I would do. So well-maintained and renovated 12 units. So that's good. So 12 units for 1.9. So now you have to think, okay, so if this is well maintained and renovated for 1.2, are you going to be able to fix this up at 800,000 plus the renovation costs to be below 1.2? Okay, and similarly for this one's a little bit more. Okay, so at 1.365. So you're sort of comparing all the buildings now side by side. And then this one here, which is the vendor financing for 900. Okay, so this 900 one, I would actually compare that to this one that needs repairs, because both of them actually need quite a bit of repairs. The benefit of doing this vendor financing one is that they're willing to finance it. It's not described as downtown, so you sort of have to weigh that, because usually downtowns come with more crime rates, some undesirable behaviors, right? So these two, yeah, so the vendor take back one on this property and this 14th Avenue one would be more comparable, and run those two numbers together. Then this one, the Regina Avenue one, comparing that to this Gray Street one and comparing it that way, because the number of suites are pretty close. The price point is the same. The building condition appears to be the same. So then that's where the comparisons would go. So this one here is 11 2-bedrooms and one bedroom unit. Building completely renovated 6 years ago. Okay, so that's pretty good. So maybe the outside is old, but the foundation, maybe the newer, like the stuff inside, like if they completely gutted it, that's what you need to verify, is what percentage do they mean when they say completely renovated? Kitchens, bathroom, flooring, etc. So usually, because it's only about 16 years old, you shouldn't have to do too much renovations. Okay, so it's been on the market 172 days, and there's not that many pictures. Like, it's just 2 pictures. right? Yes, just two pictures here. So let's go in and run the numbers on this one. Okay, you know what? I sort of want to run the numbers on this one just to see if it would cash flow, because they actually have the pictures on the inside. Oh, and I want to show you this. So because they have the pictures on the inside, you sort of want to look at the condition of the inside, because then that will sort of give you an idea of how much renovations needs to be done here. Okay, so you could see the window here, and look, the screen's out. They have window ACs. And if you look at the kitchen, it's dated, right? It's not new stuff. So you could see like the cabinetry is old. Okay, the baseboards, so it's baseboard heating. Okay, so, and what is that? That's just leaning against the wall. Yeah, sometimes you have to wonder what the photographers are thinking when they take pictures. So let's see here. So yeah, see, there's boards just lying around, right? So the kitchen, sorry, the bathroom isn't that great. Like these pedestal ones, it doesn't allow for a lot of storage. And if you're a tenant, you want storage space, right? So, you know, so just some stuff to keep in mind there. This picture, what it tells me is that it's going to need some cosmetic stuff, like, you know, some new curtains. Look at the cupboards here. Like the closets are very dated. The baseboard, the coverings aren't on properly, right? So it does need a little bit of fixing up, but not like not a lot. Okay, so it's like some fresh paint. There's a stain right there, so you might need to, you know, fix the flooring there. Okay, so yeah, stain on the carpet there, you know. So yes, some minor repair stuff, like there's a brick holding the door there. All right. So, you know, so it's nice to look at the pictures, but don't get too caught up on looking at the pictures because it's not your deal yet. Okay. Oh, that's nice. It's right by the park, which is why they show you that. Okay. So let's unshare this and I will bring up the Excel sheet and let's run through an analysis here. Okay. So let's see, blank flip. No, we're not going to be looking at the flip one right now. We're going to look at this one here. So I'm going to bring up the, let's see here, I'm going to make this a little bit smaller. And where's that realtor slide here? Okay, so let me move the realtor stuff over so I can see what I am putting into there for us. Okay, so let me share the screen and we will go into the analysis sheet. Okay, so here we go. So, okay, so this is the standard form that I use. So let's go and look at the 3800 Regina Street one. Okay, 3800 Regina Street. So I'll go in here and just dump in the address. We'll change that to Regina SK. Okay, their asking price is 1365, 123. Okay, and so I'll just make the buying price the same number as theirs for now, just to see what it would look like. They're saying that, you know what, I'm going to put in about 5K a unit. So there's 12 units here. So I'm going to change this 12 to 5. Let's do 10K just as a security there, because then that will also act as a reserve. Okay, so now we have total units. So we're going to go and change this. So let's see, 12 suites. We have one bedrooms, 11 one bedrooms, sorry, one bedrooms, and one bachelor. So there's 12 units. 12 units in total. So each unit is going to cost me about 123,000 with the repairs in. Okay, so yeah, so I'm gonna go there. So the total rent, so now we need to go and estimate what the rents are because that's not in here. So let's say here we're gonna go, okay, so it's pulling a formula from here. So I'm just gonna go say this star, see, for a one bedroom, I'm gonna say 300, okay? And I'm just going to make this equals the next cell over, just for comparison right now, equals the last cell times 900 for a bachelor. Okay, so now I might be completely off on these rents, so that's where going to check it would be a good idea. So it's pulling info from another sheet that I have. So let's just say, I'm just going to go equals this amount star 10%, 1.1% here. So what I'm, times Q, did I not do that right? 15 times 1.1 should be. Okay, let me go in here again. So I want to basically take this, right, plus this star 1.1. No, that's too high. Okay, so basically what I want to do is basically increase the rents to 1,400. Okay, so let's do that one again here. So I'm basically going to say 1,400 star 11 units. Okay, so in my best situation, potentially I would be making 1,400 a unit instead of the 1,300 a unit. And then I'm going to go here and let's just say it's $1,000 for this room here. Okay, so then that's going to take the middle of that. Okay, and then what I'm going to do as well is take the median of that. So the mid case would be getting 950 for the bachelor. Okay, so I'm going to assume no laundry, no parking, no nothing right now. So the total the total rental income is 15.2 per month because there's 11 units. Yep. Okay. And then so the annual income would be 182. So let's go here and figure out what the utilities would be. So let's just say it's $1,000 a month. That's on the high end. So maybe, okay, well, let's leave that for now. Okay, so electricity, I'm going to say 500 a month. Taxes, they had the tax number here. So 14,000 was the tax. So I'm going to put in 1,500 here. Okay, insurance, I'm going to leave that as 5,000. 10% for property management, repairs, vacancy. I'm going to get rid of that internet requirement, other 5%. Okay. So as you can see, my water, my heating and electricity and the water, I'm going to put to $100. No, let's go $200 a month there. Okay. So then that's going to be equals that star 12. Okay. So I've got water, hydroelectricity, taxes are in there, insurance. Okay. So my annual my annual expenses is about 80%. And I'm okay with this number because at this point, I'm just guessing my best guess on what the expenses would be. And I have an expense ratio of 44%. So that's actually a little bit on the high end, but because we're just at the initial stages of the due diligence, it's totally fine. Because if this looks promising, then we would go and get the actual numbers for the utilities. Okay, so then we go down here and let's just say the first mortgage. Okay, so we're going to put 25% down. This down payment there is 0. We're going to have a 0 VTB. Okay, so let's do that. And then this is going to be my 25% times my buying price. Okay, that's perfect. So then the balance needs to be updated here. So this is because I was working on another project that had an assumable and a VTB, so which is great. So this, okay, now I'm going to change this to 6%. Okay, change these to 0. And okay, so this now we're going to calculate this up. Okay, here we go. So what I've done is I've taken the interest rate at 6%. Okay, so now you're going to need to stress test this as well. I've used an amortization of 360 based on my balance of 1 million roughly and an interest rate of 6. And then, yeah, so that's fine. So look at this. So it is positive cash flowing at $2,351 roughly. Each door is going to make about $195. Okay, so this would be a property of interest to me if I was buying in Regina, Saskatchewan. Okay, now I would then go and reach out to the agent and yeah, get the numbers, right? Okay, so that's a good one. So let me save this and then we will go into the next analysis. Or should we? Do we have time? Let's see. Okay, no, you know what? We do not have time to go into another analysis. So this is the one analysis for today. But the steps that I took is pretty much the same idea, right? So then once you get the numbers from the agent, you come back in here, you fill it out again, updating it. Okay, and then so as you can see, I've got so many tabs at the bottom. You just want to go through every single tab and just run your numbers. Okay, so let's go into the questions. Okay, so I do have 2 or 3 questions. All right, let me see. Where's my mouse? There we go. Okay, so let me bring up my cards here. Okay, so okay, good. Okay, so I do have 2 questions. All right, so the first one is, what questions to ask when talking to a seller's agent? Okay, so usually when I'm getting into an area, I don't bring in my agent yet, okay? Because I value their time and I don't, a lot of times I'm just learning about an area, just getting the information first. So I will actually just call up the seller's agent myself, get as much information I can, and then run the analysis. And then if it works, then that's when I get my agent involved, okay? So I still use my own agent as a buyer's agent. Okay, so in terms of when I'm talking to the seller's agent, I tell them that I'm the buyer, okay? I'm not the agent, that I want the rent roll and the expenses. I ask them why the seller is selling, okay? I ask them, what the tenant profile is, what some of the repairs are. So the biggest thing is when you're talking to the seller's agent is you want to call them. You actually want to get on the phone and actually talk to them, ask them questions. You want to ask them questions, let them tell you the stuff, and then ask them more follow-up questions on the stuff that they tell you. Okay, it's not enough just to email them or text them, or WhatsApp with them. Okay, you want to get on the phone with them and actually talk to them. Usually a good phone call would be like 5 to 10 minutes. Okay, some calls you get on and it's so keep in mind that you're not just calling the agent to ask about this property. You're networking, you're building a rapport with another agent, because you may get onto their mailing list, right? And there may be other deals, other opportunities that they have that's not on your radar, that's not on your agent's radar. And so this, networking, talking to them, they might be like, oh, Huong, so you're looking for a multifamily in this area, in this price point with an assumable mortgage. So, hey, I've got something, that's coming down the line, okay? So part of talking to them is not just asking them the questions. Okay, then you also want to ask them like the tenant profile. What type of individuals live there? Is it more long-term renters, like 3, 5, 6 years type of deal, or is it a lot of turnaround? You want to ask them about renovations. You want to just get as much information from them. If the property's been on the market for a while, you can just say, hey, you know what? How come the market's been like it hasn't moved, right? The agent may tell you, hey, we've had some offers, but the seller wasn't interested at that price point. Or they could be like, oh, well, there was an offer, but the financing didn't pull through, right? So all of that information gives you intel. Okay. And so you want that information. Okay. So the more questions you have to ask them, make it natural, go with the flow, enjoy the conversation with the agents. Okay, so that would be my recommendation, is to have a list of questions and just get into the habit of asking as many questions. Even if you think it's a dumb question, ask them anyways. Okay, all right. Next question. I have been investing for 5 years and have several small multifamily units. Okay, so small, I'm assuming less than 10. So if I'm incorrect on that one, please let me know. Should I expect my real estate agent to know more than me? Okay, so if you've been investing for 5 years in small family, should I expect my real estate agent to know more than me? Okay, so I would say most likely, yes, you should expect your real estate agent to know more than you, regardless of how long you've been investing. So I've been investing for 25 years and I still expect my agent to know more than me, partly because I'm not in that area, right? Like if they're local, they should have like their hands on the pulse about what's going on. They should know more about the economy, the crime rate, the new industries coming in. So they should know more in that sense. They may not know more than you when it comes to, let's say, the calculations or the due diligence portion, right? But at the end of the day, they should have an understanding of the debt service ratio, the NOI. They should have an understanding of how to qualify for a mortgage and what the rental incomes need to be so that you can maximize on your investors' pool money to return that capital very quickly. So I would say yes, your agent should know more than you, regardless of how long you've been investing and how small or how big your portfolio is. I would also say that you want to avoid the transactional agents. So transactional agents are the ones who just fill out the paperwork for you. They basically just copy and paste the offering that you put to them and say, hey, this is the offering that I want to put to the other agent or the seller's agent. So you want an agent that's not just going to do that, but they're going to look at your offering, fix it for you, give you their opinion on it, give you their advice on, hey, are you overpaying? Are you underpaying? Stuff like that. Give you suggestions, give you info about that area, what's coming into that area. They don't need to be intimate with that area because some cities are very big and they may not physically have gone to that area for 6 months, but they have a sense of how it compares to other areas. Okay. For some reason, I have a note here about wholesaling on this, and I don't know why I have that. Oh, I think it was because I wanted to share. Okay, so I'm going to share two short stories on this because we're coming close to the end of the time here. So I recently put an offering for a portfolio in Edmonton, Alberta. And I connected with a really great agent, Gary Ma. So Gary, if you're listening, hello. So Gary is one of the local agents in Edmonton that I would recommend. He is also a fellow engineer, so we connect quite well on that level as well. So when I sent in my offering to Gary, within like an hour, he sent me a bunch of emails saying, Huong, you're over offering, okay? And here's all the supporting data on why you're over offering. And I was like, oh, that's great. Okay. So one, you want an agent like that who's like in your face, like telling you, hey, you're over offering and here's the reasons why. Okay. So and he gave me a bunch of suggestions and stuff like that too, in terms of the offering that I was putting forth. So that's good. So now the wholesaling. So the reason why I have a note about the wholesaling is I was working on another opportunity, and the agent that I had, I would say, is an experienced agent. Okay. He had been in it for several years now, not as long as me, of course. Okay. But there should have been a level of understanding, a level of knowledge there. Well, it turns out that in our conversation, no idea what wholesaling was. Okay. And he also had no idea what GPLP was. Okay. So the minute that I knew that he didn't know what wholesaling was and didn't know what GPLP was, he obviously was not the right agent for me. Okay. So, and the reason why I say that is because I need an agent that is talking my language, right? And if I'm working on an opportunity, and especially if these opportunities are like $5-10 million, and I'm going to need to work with money investors, we're setting up in GPLP, we're setting up shares, right? And so I need a real estate agent who's going to represent me and understand the structure that I'm going to be working with to make sure that the opportunity that we acquire is going to be financially sound. Okay. Okay, so that is my question on that one. So if, yeah, regardless of how long you've been in real estate, you need an agent that is at least talking at your level and know more than you. Yeah. Okay, that is it. Okay, so if you want to chit chat with me about real estate before next Monday, you can use the QR code right over there and connect with me. Otherwise, you can wait till next Monday and I will be live again. All right, thank you very much, everybody, for tuning in. Have a wonderful day.